Welcome to Stop My Crisis. I'm your host, Vivian Gaspar. Are you concerned about your taxes? Do IRS make you feel like you're breaking into a cold sweat when you just think about the word? Do taxes get you wondering on what you should do on a day-to-day basis or paycheck to paycheck? I'm really lucky to have with us here today Kendal Ludden. He has been an idealist tax attorney and CPA for over 30 years. Mr. Ludden specializes in holistic accounting practices and resolving IRS issues. How have you decided to get into such a field where so many people find it so really boring? I mean, it's IRS stuff and accounting.
It's very interesting. It actually started for me in 8th grade in a social studies class and helping my mother with her taxes.
8th grade, you're helping your mother with your taxes?
Yeah, I mean, just in social security, social studies, we learned about taxes, and my mother was a waitress, and it was able to use some of the lower income things like an earned income tax credit, which is a phenomenal device for kind of the working poor, so that they're able to survive and live because they're out there earning an income. And by doing that, they're being productive in society, so the government gives them benefits.
So you're mentioning lower income wage earners. What income level is too low to file tax return, or should everyone file regardless of how little they earn? I actually heard someone tell me once, I filed too little income, the IRS doesn't care about me.
It's not that they don't care, and you should actually kind of care. The new tax law, people think you're going to be able to do things on a postcard, and that just isn't so.
For all the people who decide that they need to make a little extra cash, maybe they sell things on eBay or even on Craigslist, or what about the person who's just making a few extra dollars, dog sitting, babysitting, just little tiny ways to make money? Should they report that to the IRS? I think they get so nervous that they'll be having additional tax burden on them, or is it more beneficial to them?
They should absolutely file. The law requires you to file and report gross income from whatever source derived. So anytime you have an appreciation of wealth or sell something on a personal nature, you are supposed to report that. But the benefit of it is if you're doing something like an activity, you can actually deduct your expenses and offset your income with the expenses. And in some cases, like a lot of my clients, their expenses exceed their income. So that produces a tax benefit that they can use to offset their other income and essentially reduce their taxes by being able to claim not only just all the income, you're actually also supposed to claim all related business deductions.
All right, so let's say an individual, they have a salaried job, but they're sitting at home saying, listen, I need some extra dollars. There's so many people just looking around their house and from home and selling a few things, whether it's eBay, Craigslist. I bring this up because I think there's millions of people out there doing this, right?
Yeah.
And so what kind of, tax breaks, or what should they look to deduct, and they're not even considering themselves a business or running a business? So if they're doing this, and let's say they're only making a few $100s a year, just very minor, does it worth it for them to take a portion of their rent or their mortgage to write off, even calling it a home office if they're doing this from just their living room or their dining room?
Yeah, I mean, a home office is a great deduction for businesses. The key is actually the filing and the reporting. If you do a business on your 1040 and don't have a separate business entity, you file what's called a Schedule C. And that not only being the most expensive tax return or form from the government, because if you have net income, you have to pay a 15% self-employment or social security tax, but it's actually also the most audited form. When you claim a home office on your Schedule C, there's actually red flags, and it's a special form you're supposed to file. An anesthesiologist actually got caught by the IRS.
For a home office?
Correct. The IRS thought he didn't need a home office. He went to the Supreme Court, and this guy lost his home office deduction.
Really?
I personally could have argued the case before the Supreme Court with 3 simple questions. The first being, is it tax on income or services? And it's obviously a tax based on income. Second is, if you don't send your patients any money, do they send you bills? And, if you're in the medical field, you'll know even if you send them a bill, they might not send you money. And the third thing is, if an anesthesiologist is handing out invoices or bills in the hospital, he's not going to have very many patients. So ultimately, they overturned things and allowed a home office deduction in this particular case. But if he had a separate business entity doing it, then the red flags aren't there, so it's easier to just deduct your house's rent.
So if someone is doing this as a side business, because obviously, the vast majority of people are doing this as just a little source of income, just something extra, right? And if an average person is doing it, does it behoove them to have their own little sole proprietorship to make it more legitimatized to have that deduction?
I wouldn't go the sole proprietorship direction. I would actually form a business entity, and it's typically either a partnership or an S corporation.
And that's worth it to do?
Oh, yes, absolutely. First of all, when you lose money on a sole proprietorship, the government really looks at that. They're auditing that form. Whereas if you lose money on a business, they're not really auditing it or looking at it. And the audit risk on a business is actually about 1/10 of a Schedule C sole proprietorship. And that's when they do it, if you're a sole proprietorship, it's one person, so you end up being a big fish in a small pond. Whereas if you take the same business and turn it into a partnership, it now becomes like a guppy in an ocean of all the other partnerships that exist. Typically, actually, I recommend usually using an LLC, but again, there's no real tax law in an LLC, so you really need a professional to help you guide you and things like that.
So if someone who's just making side income rather, instead of having what they would feel like, oh, it's not a big business, I'm actually a salaried person, but you don't want to get caught. I mean, we all know that having an IRS audit, it turns into a huge, scary nightmare, right?
Yes.
So the way to avoid that would be what you said, is to create an LLC or an S corp. And do you need a tax professional or an attorney to do that, or could you do that on your own?
You know, if you're doing it on your own, you're just forming it with the state. You're not necessarily using all the tax benefits. With current business owners, usually the structure is actually the worst thing that they've done, and you want to make sure they're doing it in the proper structure. So that's why I always recommend for individuals to have typically a partnership LLC, but S corps also work.
Oh, good. So at least then they know the safest way to do it. That'll get them the least amount of red flags and potential issues with the IRS.
Yes, correct. That's the way I always structure things. I know what the IRS is looking for. The typical issue with the IRS is they have income that you haven't reported on your return. So they're looking for something. So I make sure that it gets reported there and then taken out and put in the safest possible way.
But what about when your home itself can derive income for you? So for all the people out there who don't consider themselves to be big real estate investors, but they bought a 2-family house or even a 3 or 4 unit, but they live in one of the units, how do you suggest that they handle that from the vantage point of helping with taxes?
Again, a lot of individuals, like similar to doing a Schedule C, will do a Schedule E, page 1, which is specifically for rental income. But when you do that, there's a lot of hurdles you have to get over, and if your income is too high, the government disallows your deduction.
So that's very big information. So when someone has a multifamily dwelling, even if they're occupying it, that's how they should handle it.
Correct. They should generally, if you have real estate, because the government distinguishes between active income and passive income. So you can deduct your mortgage interest and real estate taxes. When it's a business, you can also deduct insurance and repairs and stuff like that, which you can't do if it's personal.
Oh,
So-
that's really big information, because everyone's going to have some level of repairs on their home, and to have the ability to deduct that where you couldn't have otherwise, I think that's a very valuable tip. And with that valuable information, stay tuned and come back and watch us so we can learn more about how to save taxes by starting your own business.
3.4 million children are investigated by Child Protective Services annually. Of the kids in foster homes, 75% were neglected, 17% physically abused, and over 300,000 sexually molested.
I decided to dedicate my practice to helping people and parents who have lost their children.
Attorney Vince Davis has brought thousands of families back together, and he will fight for yours.
Welcome back to Stop My Crisis. I'm here with Kendal Ludden, and he's teaching us on how to save money on our taxes by starting our own business, even if we're not looking to run a big business. Kendal, how do we save money?
Well, as we discussed earlier, with ordinary and necessary expenses, anything that is business related can now be deducted to offset your income. So that's where the real key comes in. In theory, your business can lose money, and if it's a little side business, you can offset your other active income with this business loss.
So let's say somebody's just a regular salaried individual, W-2 wage earner, but they're a homeowner, or even if they rent. What do you recommend? Do you recommend that they just find a few things to sell on Craigslist and then they can create a legitimate, real business earning, and that would help them legitimately deduct some expenses around their home or some usefulness of that nature to have a business that way?
Well, yeah, I mean, the key is you do actually have to have a business purpose, but to me, just preserving family wealth can be a business purpose. So just your home can be a business. Typically, you'd like to have some sort of revenue or income for it, so you can get creative in trying to get ideas on how to produce revenue. But once you do, you can deduct all your ordinary and necessary business expenses and even offset your wages and other type of income.
So for all the millions of people who are watching and thinking, well, I'm an average person, I need to make some more money, or maybe if I get some tax breaks, is it a good idea, and this I'm just trying to reach a little bit, if they rent out a space in their room, is it legitimate to now declare that some income? So if they rent out a room or maybe an area of their garage to store something for somebody else, like if somebody has an antique car.
Sort of like Airbnb is definitely a business. There actually is a great exclusion if you're renting your home for less than 14 days. They call it actually the master's exemption.
What does that mean?
So if you rent property for less than 14 days, that is an exclusion. But again, you're really looking to form a business. I wouldn't necessarily want somebody in my house, but yes, the ideas you did suggest do work of finding a way to, if you have a totally separate area or a basement or something like that, that can certainly.
I mean, not that you're looking to make a ton of money with it, perhaps, or a lot, but there's so many millions of people out there who are struggling. And if they could find a legitimate way that they could save some money, so for example, do dog sitting. It doesn't sound as interesting, but you don't have another human being in your house. You're not renting out a whole area or whole room, perhaps, like you're not having a boarder. But if throughout the course of a year, I heard that it pays between $35 and $40, something of that nature, a night to have someone have their dog or cat in your home while they go on vacation. Now, if you could do that sporadically throughout the course of the year, would that qualify?
Oh yeah, absolutely. And the great thing is now you're going to have the $30 or $40 cash that you have, but for tax purposes, you can offset all your other expenses that some of you've already been paying. So as a result, you can lose money in your business and then use that business loss to offset your other income.
I mean, there's so many ideas. I was just trying to come up with a few that might not seem very overwhelming or intrusive for people. You keep mentioning write-offs. We all want to get write-offs from the taxes, the IRS legitimately, completely understood. But really, what is a write-off?
Well, what a write-off is just an ordinary and necessary business expense that is deemed for that type of profession as to what you can deduct. So for instance, you had suggested with the dog sitting, you may actually go pick up the dog and stuff, so you have your car to drive there, you're contacting them on your phone, so now you can deduct your cell phone. So these expenses that you have anyway now become deductible to offset that income and actually even produce potentially a loss that you use to offset your other wage income or W-2 income.
So when someone somehow says they have a loss, that's a good thing, you're saying, in the tax realm?
In the tax realm it is, yes, because the loss ends up being a deduction that you can use to offset your other income.
Anything that's a salaried job, you can now deduct from that income. So if somebody makes a salary of $40,000 a year or $30,000 a year, they can now reduce that to say you're paying taxes on less of an income?
Yes, that is correct, absolutely. So the key with that is that you can also offset other income, interest, dividends, any type of income. So income all gets added together to one number. And the lower that number is, the lower your taxes are. So if you have a loss, you can offset your other income with that business loss.
So how many people do you think are running a business from home to any level? Some of the examples we gave or some other ideas. And is it a legitimate right to declare this? It's not going to be a red flag to the IRS. That's what people are normally afraid of, is to have audits.
Correct. I mean, what happens with the business is it just comes through as like one separate number when it's a separate business. So there's no correlation with the IRS to this one number. Whereas if you do the business on a Schedule C on your personal return, that's where you have all the numbers on there and they can look at statistics. So by doing a separate business, you essentially become two separate taxpayers.
How are you two separate taxpayers? That sounds a little confusing to me, and I'm definitely not an expert.
Well, the business is its own separate return if it's an LLC, like a partnership. So all of the income and expenses go on there. And then similar to getting a W-2, you get a K-1 from that business, which is typically one number comes through.
You're now mentioning some IRS terms that I'm not familiar with. What is a K-1?
Basically, a K-1 is a business has a list of income and expenses. And then that number, whatever income flows out, typically it's ordinary income, but a business can also have interest and dividends, and a business can sell things. So there's actually like 20 different items on a K-1 that could potentially flow to an individual return. If it's an active business, it's usually just one number.
So you're looking at personal tax returns and ways average people could save some money. And the K-1, is that used for wage earners?
No, what the K1 is the K1 comes through from the business. So the K1 is really like a W-2 from your business.
That clears up a lot for me. Stay tuned and come back, and so we can learn more from Mr. Ludden on how the personal IRS returns are really looked at by the IRS and to try to stay a little bit away from audits.
What we provide is the experience that physician assistant our pre-PA students need. The success rate of our program of having students accepted the PA was 97%. All our students we have relationships with. Many of our students come back and help out. There's a lot of different challenges, but the students, we have to rapport with them, and they're like our children. They really are.
Welcome back to Stop My Crisis. I'm here with Kendal Ludden, and he is talking about how to avoid, to the best of your ability, being audited by the IRS. What is the biggest problem, Kendal, that the IRS usually looks at? What are the biggest red flags that an individual can have?
Well, the biggest problem an individual can have with the IRS is not reporting all the income that the IRS has.
How does an IRS have income on you?
Well, if you have a W-2, that gets transmitted to the government and Social Security to give you benefits, and they know you've earned the income. If you have a business and you get a 1099 miscellaneous, they know you've earned the income. So what I do with individuals who get a 1099 in their own Social Security number is you have to report that on the return. If you don't, they will give you a notice, and that type of income will be assessed at approximately a 40% tax bracket. Because what happens is they're going to be at the maximum tax bracket, and on average that's about 20 to 25% for people. Well, they tack on the self-employment or Social Security tax of another 15%, and because you didn't claim the income, they don't allow you to claim any business deductions. They don't just give them to you.
That's the really big problem. And what if somebody just legitimately forgets? Do they have the ability to amend their own tax return to reflect it?
Yes, absolutely. There's plenty of times that I get notices that people haven't reported all their income. And the government's not always right, they're usually not. So in which case, if you're agreeing that your return is not correct, but they are not, then you actually do have to amend your return. So a lot of times when a government notice comes in, they actually do consider that an audit when their computer sends out a letter and they make adjustments. So by doing that, you amend your return and just get things correct. So just because you get an IRS notice, it doesn't necessarily mean it's right. And that's why it's crucial to go to the tax preparer who did your returns. Or if you do your returns as certified, I personally suggest you find somebody to do it, and then they're able to make sure that all your income is reported.
So many people, they just forget. It's the stress of life. So you're saying there is a definite potential for a red flag if you leave off a stock sale, or what if you had a bit of side income? You did something minor as a service for someone on the side, and you forgot or didn't realize you'd be issued a 1099. Maybe it was only a couple $100, and but the IRS. They do give a little leeway with that.
Yes, there's definitely leeway. What would happen is if you make more than $600 for somebody during a year, they're supposed to issue you a 1099.
But you have up to $600 for not to legitimately be not invoiced, but to be issued a 1099.
Well, yeah, just because the government doesn't have a 1099 doesn't mean you're not supposed to report all the income you received. So just because you don't get a 1099 doesn't mean it. So what I do with business owners who do get a 1099 and they have their own business, I report the income on the Schedule C where the government expects it, and the expenses exactly offset the income, and I say less the amount reported on a 1065, so that there's a trail there. And then the 1065 reports the income. You're able to claim all the expenses and just bring back the one lower number.
So many people have mentioned to me that they're looking to form a trust to protect them, either from creditors or from, protect their assets. How do you feel about a trust?
A trust is a wonderful device because you no longer own the asset, but you're able to control the asset. If you have any other liability purposes and somebody sues you, if you own your house, they can take your house.
Is it a legitimate method, or is that potentially an IRS red flag when someone has their own personal home in a trust?
Having your home in a trust is not a red flag. It produces the benefits of if it's your own personal trust, you can only still claim the same deductions you would have, which would be the mortgage interest and real estate taxes. You can't claim any additional tax benefits, but it's not a red flag. When you do that, you're able to control your house, but not own your house. So it does offer a significant creditor or asset protection.
Mr. Ludden has just shared some great tax tips on how to protect your assets. Come back after this break and learn some more on what the top 3 IRS issues could be that you would face.
I help people start their businesses or fine-tune their businesses, and I upgrade this business to one that I have fun in again.
Welcome back to Stop My Crisis. I'm here with Kendal Ludden, and he is here to tell us the top 3 personal IRS issues that come up that you could face. Kendal, the IRS, is that really dealing with taxes? Do they look at it as just a science that's in the computer, or as an expert professional? Do you help people learn that it's really an art form and how they can deal with the IRS successfully?
Well, a lot of people think that IRS is all math and it's a science and it should be real easy. But when you hire a professional, it's really an art form of going through and questioning them and finding the best tax deductions. For instance, Money Magazine used to give a typical taxpayer to 50 different accountants and have them come up with their tax liability. Not only did none of the 50 individuals ever come up with the correct answer,
Wow.
but every individual came up with a different answer.
And none of those answers are bright red flags for audits.
No, it's just taking a little circumstance and using it differently. So, if you ask any question, the answer is it depends. So just one little factor can dramatically change an answer. And that's where the art form comes in as opposed to a science, knowing what the answer is or how you can change it to benefit people.
Is that why that no one could ever do completely uniform taxes, because every single person's life is completely unique to them?
Yes, absolutely. And that's why just hiring a professional, I typically save people many times over of what my fee is. So I just add value to what they have. And if you try and do it yourself on a little postcard, you're just not going to know, all the best saving devices.
The IRS, when they send a letter to an individual, people break out in a cold sweat. What should they do? Should they go down and speak to that individual agent of the IRS themselves?
What the IRS comes calling, I think it's very important, as a former IRS agent, that you should actually go with a professional. If somebody's done your tax returns for you, they should represent you because they understand the material. But if they don't, or if you did it yourself, you should definitely hire a professional because they know the ins and outs and how the procedure is going. If you go to the IRS by yourself, you could say something totally innocuous that really ends up hurting you. So if I personally have a client, they actually never go to the IRS. I handle everything for them. I want them behind the scenes.
As a former representative of the IRS, does the IRS truly work with people? How does that work out? Should they be afraid to talk to them? Should they postpone filing? What's the best tactic?
Well, if you owe the IRS money, the absolute worst thing you could do is postpone filing, because there is a failure to file penalty of 5% a month up to 25%. So they just slam you if you haven't filed. If you owe money, they will work with you, and the interest and penalties is less that you have filed, and there is a possibility for an installment agreement where you can pay it over time. So they are willing to work with you if you owe them money.
So you say failure to file. What amount of time does that become? So do you have 12 months, 2 years?
No,
Does it have to be immediate?
Yeah, April 15th is a drop-dead deadline. You can always file for an extension till October 15th, but you have to meet those filing requirements and a filing date, and 1 month is a 5% penalty if it's a failure to file.
And what dollar amount does that penalty represent? If you didn't file and you don't know what you owe, how do they to calculate that penalty?
Well, it's just based upon the tax owed, so whatever you come through with a tax return, obviously if they file a tax return for you, they're going to accumulate all the income you've earned, and they will give you no deductions and just tax you at the highest possible rate. And then it's just a 5% per month for late filing penalty. So after 5 months of not filing, you owe 25% more.
That is a big eye-opener for so many people watching. Thank you for that. What is a better tax and accounting service, and how does it apply to small business owners?
Well, my business is actually called Better Tax and Accounting, and what I do is I've been in business for 30 years. So when somebody comes to me with their tax return, I can very easily mimic and do exactly what their prior accountant has done. If he's done things I wouldn't have done, what I end up doing is I take that and add that as an arrow to what I can use for later clients. So I've been doing this for 30 years and seeing all various dispersed things. When you give me your tax return, I'm going to do exactly what your accountant has done, and if he's missed things or deductions or things, I just add to it. So in that way, I can say that I'm better than basically any accountant, because you're going to give me what they did, and I'm going to add my personal knowledge to it.
Wow, that's Kendal, thank you so much for coming to educate us, because as uncomfortable as a conversation is, the reality is far more uncomfortable. Listen to this valuable advice and stop your crisis, because unfortunately it is something you must deal with. Thank you for watching this episode of Stop My Crisis.